We haven't seen too much coming out of the Pi network in terms of price movement or news recently. And so I want to talk a little bit about that and kind of discuss what we're seeing. I think obviously we're kind of in this transitionary period onto the mainnet migration and a lot of that type of stuff. But we're also seeing a lot of things coming from like the wider crypto space too that I think could have wide and far-reaching applications to the Pi network and the Pi ecosystem as a whole. So I want to just talk a little bit about both of those today and kind of draw the line together of what are we seeing happening right now in the macro market? How could this impact crypto? How will this impact Pi specifically? As well as what are we seeing with the Pi network? What has been going on recently with price action? We have seen some pretty interesting and potentially suspicious recent price action. So I want to discuss that a little bit as well. Got a lot to go over today, so let's just go on ahead and we'll dive right in. The thing I actually want to start out with here, taking a quick look, is the Pi network. We can see this is the Pi core team's official account. We can see everything here. Obviously 4.3 million followers. Really insane following. We've talked about this in a previous video. I think they're the 5th or 4th largest crypto account ever, which is insane for a project of this magnitude. So pretty cool there. And then obviously we can see they're still getting an insane amount of impressions. Oh, actually, breaking news, 3 minutes ago, we can actually see that there's a tweet released by the Pi network. I was actually going to mention that we actually did not see anything up until May 23 or May 23rd coming out about anything about the Pi network, so we hadn't seen much of an update here. We can see here right now that they actually have a new post. The Mainnet app list and the Mainnet ecosystem interface does not include all Mainnet and Mainnet ready Pi apps, as selection is limited based on Pi ecosystem policies and guidelines. There are many more third-party Pi apps that are not listed here. Some third-party Pi apps that serve as a directory of Mainnet Pi apps may display more or even all the mainnet apps, so pioneers can reference those for a broader view of all available apps. Check out the most recent blog. I think this makes total sense. There has been kind of some complaints, I guess we could say, regarding people not being super happy about kind of like the limited use that we are seeing. We can see here on this most recent post, which we're going to discuss a little bit, there's the 5 new community apps. I think people were kind of upset with this type of gatekeeping, but I think this is something where the Pi network and the Pi ecosystem is actually trying to kind of curate more of a process. I think they're trying to protect their users more as well, so they're not letting just anything and everything come onto their main network ecosystem. Now again, you can agree with this, you can disagree with this, but this is quite clearly the route they are taking. Now this isn't necessarily like shadow banning or doing anything like that, so to speak, with the minor apps or the non-listed apps. You just have to look for other tools to actually find those. This is, I would say, kind of akin to like a Binance listing, right? I think people look at like Binance and Coinbase, for example, as a little bit of like kind of factors of trust. And so if somebody lists something on Binance or Coinbase, you have a higher degree of trust than something that's like just floating around on Dex Screener. And so I think Pi network is kind of taking this same type of route where if the Pi team actually lists the project, there needs to be some threshold that they want to hit in terms of kind of reliability of the project, things like that. So overall, I think this is fair. There has been some kind of complaints and some things addressing this. So the fact that the team has come out and discussed this directly, I do think is a good thing. As we can see from price, we have not actually seen much going on with the recent movements of the market. I mean, we've seen the market kind of stutter out a little bit. We saw this kind of major move up. This was that video that we'd released a couple weeks back where there was a major whale that bought a whole ton. Apparently there was some alleged accusations of the Pi team kind of selling off a lot on the pump, maybe potentially manipulating the market a little bit to sell off some tokens at a better price. Whether this happened or not, obviously, we'll probably never know for sure, but there definitely have been clear accusations of this and potentially some proof there. This is kind of what it looks like. But again, I don't get super deep into all the like blockchain sleuthing and things like that. I'm more just looking at the chart and kind of playing things as it comes. From what it does look like right now, we can see price still kind of subsiding back down to what I would imagine it would end up at kind of the 65-cent level. We are at the 70 cents right now. We can see we actually did top out at about $1.65. So kind of a wild pump and then dump here. Of course, does not look particularly good. So definitely be careful if you are kind of trading around on the Pi chart and things like that. Of course, does not mean, it's an illegitimate project or anything. Things get manipulated all the time. not even by the team. There's oftentimes market makers that do things, which is why we look so closely at the liquidation map when we do our market overviews and our market reviews as well. So very, very important just to kind of always make sure you're paying attention with that type of thing. Look towards the fundamentals. I'm always looking at the fundamentals. I did mention, as this was happening real time, we've seen it peak outside of the Bollinger Bands. When we see this, it's almost highly likely that we do see something like this happen. Of course it did. We also saw it overbought on the RSI as well. Another thing, it was kind of a key indicator whenever we see both of these happen, particularly on the daily. You can see here we're looking at the daily chart. Very, very good indicator that probably we are going to see a little bit of a pullback. We could even go and look at the Bitcoin chart. We can just, again, kind of for reference, we'll do the same type of thing here. And we'll just take a quick look at Bitcoin. And you'll be able to see we've seen something similar. Not obviously to the same degree, but it's the same type of thing. And so let's just take a quick look at this. We can see here, kind of reaching out here, getting not overbought, but close to. We can see again here, reaching out, getting close to overbought. Recovering a little bit, again, mostly here just consolidating, not necessarily a pump and dump like we saw from the pie chart. We can also see here, same type of thing, getting very close to the outside here, also being oversold. Again, seeing a retrace here. This stuff's very reliable, guys. Of course, you can't always predict with 100% certainty, but we've been doing this on the channel for quite a while now, and so I do feel relatively confident when we start to see these types of indicators that you need to start being careful. So if you are interested in trading, of course, you just want to kind of test it out, dip your toes in, all that type of stuff. Feel free to check out BTCC. BTCC is a fantastic site. They've got a lot of great stuff. You can see here we do have the demo account. So the demo account's great, even if you are just looking to test strategies and things like that. You can also see here, we do have kind of the demo accounts. If you are looking to just dip your toes in, really, really good deal here for BTCC. They are giving a 10% bonus on first-time deposits, which is a really good deal. It's obviously, free money. I love free money. I'm sure you do as well. They also do have up to the $10,055 in deposit bonuses, as well as no VPN or KYC required. So really, really good deal. If you are interested, just feel free to check that out. And then, of course, like I said, you can trade spot, you can trade leverage, you can demo trade if you're just looking to kind of dip your toes in, test the strategies, all that type of stuff. Links are in the description below if you are interested. Now, the other thing I want to take a quick look at, if we move back to the pie chart really quick, we can see that essentially what we've seen out of the movement of the chart is close to a net zero. We're actually up a little bit from what we saw at the beginning of May. If we do look at the total 2 chart, we can see kind of the same type of thing. Actually, we spiked a bit from May, and now we're kind of just stuttering out a bit here. So kind of what we've seen from the pie chart is similar to what we've seen off the total too. So we can say it's kind of moving semi close to in lockstep, which I do think is interesting to see. And it's also good to get a general sense of, like, are we leading? Are we lagging? What are we seeing out of these various types of altcoins, and how are they performing relative to the rest of the crypto market? So obviously very, very important thing to take a look at. Now, the other thing I want to take a look at, as I mentioned earlier on in the video, we want to get a good sense of how, what impacts this, or what impacts does the wider market have on things like Picoin specifically. So I want to take just a couple quick looks over some various pieces of news that we have seen recently. First one here, we can see that Powell and Trump actually did meet at the White House today. People are speculating that this could mean rate cuts. I am actually seeing something a little bit different. Again, nobody knows for sure, and we will have to see. But so 2 of the things that we have seen recently that are a little bit worrying for the prospects of rate cuts is the fact that we've actually seen the 10-year Treasury yield go up over the past couple of months, which is not necessarily a great thing. I'll explain this in a little bit more detail here in a second. We've seen it recently start to come back down, but at least from the beginning of April up until about the midpoint of May, rates have just been steadily climbing. And we could see this actually happen from about September to January, and then from January to about April, they actually sold off pretty decent, which is a good thing. And then now we're actually starting to see them rise a bit. We can see the same thing with the 20-year also continuing to rise here. Now, this is important for 2 reasons. So the first reason is this is the thing that the US government uses to fund their debt purchases. So when the US government is actually trying to fund their expenses, they need to issue treasury bonds. And the thing that is kind of worrying, or has been a little bit of a flashing signal with the treasury bonds, is we started to see the yields go up. Now, what you may think is, well, if we cut rates, then the yields will go down. Not exactly how that works, because we need to understand that the treasury bonds move off of a free market. And so essentially how this works in a very simplified way is the US government goes out to bid or goes out to auction for these bonds. People will then essentially bid on the bonds. Previously, the US government has kind of been considered a risk-free rate. So the US government can kind of set their rates, and people will, if they like it, they'll buy it. And if there's a ton of demand, then they'll be oversubscribed, and maybe people will take lower rates. If they're undersubscribed, then the government has to start offering higher rates. Because again, if they need to issue $20 billion, but they only have $15 billion of buyers at that rate, the rate has to go up to capture that extra $5 billion that's missing. This is kind of the key point here. And so what we're starting to see is the rates are going up because we're seeing weakening demand for bonds. We're seeing weakening sentiment into the U.S. Treasury, in the U.S. Treasury bonds specifically. Now, the reason that that's a problem is because as rates go up, U.S. debt gets more expensive, which has an inflationary impact on the entire rest of the economy. Now, if you have been paying attention to rate cuts and all that type of thing, rates usually only get cut because there's a deflation, or the inflation has been controlled. The way to control inflation is by raising rates. And so the fact that we're seeing rates go up while rates haven't actually changed, that's a bit of a concern, because that means that the core inflation of the economy is actually maybe a little bit more sticky than what people may have realized to begin with. And so that is why we're seeing these bonds actually be a little bit of a problem since they're coming up, and why the Fed may not actually discuss raising rates until potentially even later on in the year, because there is that inflationary pressure that needs to be tamped down with higher interest rates. If you lower interest rates, that inflationary pressure is actually going to continue to go up, which of course is not a good thing at all. And it's the last thing that you want to see if you are the Reserve, because of course they are trying to keep that inflation rate between that 2 to 3% range. If we don't see that, it's a very big problem, and now they're of course going to have to raise rates again, and potentially even higher, which is why we have seen some of that kind of hesitancy from the Fed. So this is really, really important to understand, because I think it's pretty obvious to see how this can impact something like Picoin, even more than things like Bitcoin, for example, because when we start to see inflation rates go higher, that means investors go risk off. Maybe they're buying more bonds because it's an easier and safer way to get a higher return. And that, of course, has a negative impact on altcoins. So it's really, really important to make sure that we understand why this works and how this works, so we can kind of taper our investment strategy and all that type of stuff accordingly. Now, of course, none of this stuff is financial advice, and I'm using this as kind of a research journal to make my own decisions. And of course, I'm acting on my own advice and my own decisions, but that of course does not mean that you should be, because I'm of course taking control and taking responsibility over my own money. You of course can use my thoughts and opinions. You are likely and should be using the thoughts and opinions of other people as well. So hopefully kind of using that, you can kind of synthesize your own way to view the market, and from there, kind of hopefully makes sense to do whatever you're looking to do at that point. So anyways, really, really important to understand. Again, hopefully you found the information in this video useful. If you did, a like and a subscribe really, really does help me out. Obviously, it supports the channel greatly, and it helps me continue to grow and continue to make more content, all that type of good stuff. Also, if you have any more comments, questions, thoughts, feelings, whatever, drop those in the comment section below. I do read and respond to all of those. So if you have anything that you want me to see, that'd be a good way to do so. Thank you guys for tuning in, and we'll see you in the next one.